Welcome back to the deep dive. If you're looking for a shortcut to understanding one of Turkey's most complex corporate stories, you've definitely come to the right place. Today, we're doing a huge deep dive into Park Electric, Iritim, Madensilik, Sanayi ve Dikkaret Ehe. We'll just call them Park Electric. We are slicing through their financial reports for the first 9 months of 2025. And our mission is, well, it's threefold. First, we want to understand this company's dual life. It's part miner, part landlord. Second, we'll analyze the financials. And third, we've got to uncover this massive administrative shockwave that just completely redefined the company's governance.
And before we jump in, there's a really important piece of context for you, the listener. We're looking at figures in Turkish lira, TL, but they aren't just straight numbers. They're adjusted for inflation using something called TMS 29.
Okay, so why is that adjustment so crucial for us? Why should we care?
It's vital. I mean, Turkey is a high inflation environment, so TMS 29 forces companies to restate everything to reflect the currency's current purchasing power. It means the profit figures we're talking about aren't just, misleading inflation noise. They reflect real growth or loss. Without it, the numbers would tell a totally different story.
So we're looking at real value. Got it.
Exactly. That's the foundation for everything else we're about to discuss.
Okay, let's start with the seismic event, the one that happened on September 30th. Leading up to this, the company had a very clear ownership structure. The parent company, Park Holding, owned about 61%, and the main figure, Turgay Sinner, had another 6 or 7% directly. And since he owned all of Park Holding, he was the one calling the shots.
And that entire structure was it was vaporized by this high-stakes administrative move. On September 28th, the court appointed the TMSF.
The Tasarruf Mevduata Sigota Fanu.
Right, the TMSF, as a trustee ikayim for the parent company, Park Holding.
Let's pause on that. The TMSF, the fund, it's Turkey's savings deposit insurance fund. But they do a lot more than just insure bank deposits, don't they? Especially in these kinds of cases.
Oh, absolutely. An appointment like this signals huge government intervention. It's not a typical corporate restructuring. It usually happens when companies are tied to major investigations or when the state steps in to manage assets. For the owner, this is essentially a state-mandated loss of all control.
And the ripple effect was just immediate and total.
It was. The decision just cascaded down the corporate ladder at lightning speed. By September 30th, just 2 days later, the TMSF was appointed as the trustee for Park Electric itself.
Yeah.
And also for its key subsidiary, Konya Ilgin. The old power structure was just gone in 48 hours.
What's really fascinating here is how the new board was put in place. The old company rules were just, well, thrown out the window.
That detail is so critical because it shows the absolute authority of the trustee. You see, under the old charter, specific share groups A and B shares, they had the exclusive right to nominate board members. The TMSF just completely overrode that. It's a clear signal that their state mandate supersedes any internal company rules.
So they didn't just replace the board, they basically sent a message that their control is unchallengeable.
Precisely. And the new team took over instantly. Halil Ibrahima Yildiz was made chairman, and a whole new set of board members were appointed. They took over management on the very last day of the reporting period. So the big question now, the one hanging over everything for 2026 is, what's their plan?
Right. Do they stick with the old strategy, or is this a total reset?
A total reset or even a liquidation? That's the billion-dollar question.
Okay, so while all this corporate drama is unfolding, the actual business has to keep running. Let's pivot to the income generators, starting with bauxite mining. And here's an interesting detail. Park Electric doesn't actually operate the mine themselves.
No. They use what's called a royalties agreement, which is basically a royalty deal with a company called CTC Energy. And this is a brilliant risk mitigation strategy. Park Electric provides a license, and CTC Energy handles all the operational risk, the equipment, the labor, everything. Park Electric just collects a check.
A very well-protected check based on these 9-month results.
It really was. The bauxite segment performed incredibly well. Production volume was up about 12.7%, almost 2 million tons. But the revenue story is even better. And that's all thanks to the dollar-linked contract.
Right, because the Turkish lira keeps devaluing against the dollar.
Exactly. The royalty fee is set in U.S. dollars. It was raised to $3.20 a ton back in April 2024. So that dollar peg plus the higher volume pushed their revenue way up to 270 million lira. It's this incredible buffer against all the economic instability that makes those TMS 29 inflation adjustments necessary in the first place.
And it looks like they're operating way above the minimum requirement. The contract says 1 million tons a year, but they did over 2.75 million tons in the last full year.
They're definitely maximizing the asset, and they're focused on the high-quality ore, specifically above 42% L2O3 content. Anything lower would need expensive processing they don't plan to do. And the reserves are huge, something like 76 million tons. But the money is in that high-grade ore they're pulling out right now.
All right, let's move to that second pillar of stability, their real estate portfolio. We're talking about investment properties valued at over 2.1 billion lira. That is a massive asset on the balance sheet.
It really is, and it provides very predictable income. The crown jewel is this 10-story apartment building in Istanbul, in Beyoğlu, and it's fully leased to Istanbul Galata University. That one building brought in over 17.5 million lira in rent in just 9 months.
So you have bauxite revenue tied to the US dollar and a long-term rental contract with the university. That seems pretty solid. How reliable are those property valuations, though?
Very reliable. The sources confirm they use highly regulated government-authorized valuation firms, like TSKB. So that 2.1 billion lira figure is externally verified, which gives a lot of credibility to that part of their balance sheet. And they have other properties, too, inactive factories, land. It's a bedrock of stability.
A bedrock that's totally separate from all the administrative chaos we just talked about.
Completely separate.
Okay, now let's go to the complete opposite end of the spectrum. The huge operational headache, the regulatory disaster. I'm talking about their subsidiary, Konya Ilgin, and the planned 500 milliW thermal power plant.
Yeah, this part of the business is, it's just defined by regulatory pain. Back in October 2022, the energy regulator, the EPDK, just flat out canceled their electricity generation license. The company asked for an extension, and the EPDK said no.
And that refusal was brutal. What were the exact consequences of that denial?
3 huge blows, really. First, the EPDK ruled the delays weren't force majeure, so they basically said it was the company's fault. Second, they had to forfeit about 7.5 million lira in bank guarantees. And third, and this is probably the most damaging part, it triggered a 3-year ban.
A 3-year ban on what?
On applying for any new licenses. For Konya Ilgin, for Park Electric, and for his board members. It effectively freezes their entire growth strategy in the power sector.
So given that massive blow, what's their legal move now?
They are fighting it tooth and nail. They considered the decision unlawful, and the case is now being appealed at the Danıştay, which is the Council of State, Turkey's highest administrative court. This is a long, expensive, high-stakes legal battle that will decide the future of those lignite reserves.
But this raises a huge question for me. If the license is canceled and the power plant is basically a ghost project, why haven't they impaired the value of the lignite assets on their books? It sounds like wishful thinking.
That is the multi-billion lira question. And this is where you have to look really closely at their technical justification. They argue that their current mining operations are under a pre-mining plan, and that plan is separate from the main one, which is still valid until 2043.
But wait a minute. That lignite is only valuable if it can be burned in their own power plant, right? So if that plant is never built, isn't the coal effectively worthless?
That is the core risk. Management has concluded that because the right to mine is technically still valid for decades, no impairment is needed right now. But you're right. If that appeal fails, they're left with a mountain of low-quality coal with no one to sell it to.
So their entire valuation of that asset hinges on winning that court case. It's a huge bet.
A massive bet on a favorable legal outcome.
Let's turn now to the overall financial performance. Despite the regulatory war and the governance chaos, they still managed to report a net profit of 69.7 million lira for the period.
That profitability is definitely notable, and it's driven by that dollar-linked bauxite revenue and the property income. But we can't just look at that 70 million lira profit in isolation. We have to talk about the staggering shift in their liquidity.
What do you mean?
I mean their cash. Their cash and cash equivalents absolutely plummeted. They went from 108 million lira at the end of last year down to just 10.9 million by September 30th.
Wait, a 70 million profit is pretty meaningless if you burn through nearly 100 million in cash. Where did all that money go?
That's the biggest mystery in these filings. It wasn't one single big purchase. We have to deduce it. First, look at provisions for lawsuits. They set aside 44 million lira, mostly for worker claims from an old copper mine that closed. That's a huge cash outflow. Second, they were actively buying back their own shares.
So it wasn't a big investment in something new. It was servicing old problems and propping up the stock price.
That seems to be a big part of it. And this cash burn is reflected in their debt position. Their net borrowing to equity ratio tightened dramatically. It
Yeah.
just means they have far less liquid cash on hand now to cover any sudden expenses. They're much more exposed.
And what about related party transactions? They were paying their parent company, Park Holding, for services, right?
They were. For things like IT, HR, legal support, it came to about 5.3 million lira for the 9 months. It just shows how deeply integrated they were, an integration the new trustees now have to manage.
And what about that share buyback? How significant was it?
They were certainly active. They bought back shares, representing just under 1% of the total capital.
Huh.
It suggests the old management, before the takeover, was definitely using capital to try and manage the public market's perception of the company.
So wrapping this all up, this deep dive really reveals a fascinating contradiction. You've got this highly profitable, stable core business, the bauxite and the real estate. But that stability is completely overshadowed by this massive legal fight for their future and, of course, the sudden state-mandated governance overhaul.
Yeah, the takeaway for you is pretty clear. The company's near-term health is fine. Those existing revenues will keep them going.
Yeah.
But the future, their entire expansion strategy, it all depends on the outcome of that appeal at the Council of State. And the people making the decisions now are not the old owners. It's a government fund.
And that brings us to our final provocative thought for you to consider. The TMSF trustee was appointed on September 30th, the very last day of this reporting cycle. Given that the TMSX mandate is often about maximizing state recovery, how will this new government-aligned management approach the company's biggest assets? Are they going to keep fighting for that power plant license, or will they be mandated to just sell off that billion lira Istanbul property to cover liabilities from somewhere else in the wider group? That strategic pivot is what will define this company's next chapter.